Chart Watchers, and welcome to this Wednesday, July 3rd, 2019 Market Watchers live show with your hosts, Tom Bowley and Erin Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Taking a look at today's action, you can see the Dow Jones Industrial Average trying to make another breakout here, up 127 points. The S&P 500 is now further into record territory, 2991. Up 18 points and approaching that 3,000 level, very psychological level we want to keep an eye on. The NASDAQ up 48 points, having another strong day, also breaking out to a recent high. While the Russell 2000 is up, it still is lagging some highs that it saw earlier this week. So on a relative basis, still struggling there. 10-year Treasury yield continues dropping, so we are seeing money rotating not only into equities, but also into Treasuries. So a lot of new money coming into the market in order to support both markets. The volatility index continues to drift lower. It is actually up 0.03 today, but you can see the overall trend here over the past week and a half, definitely down. Leading to the upside today, defensive areas. We've got real estate moving to the upside along with utilities and staples. As far as the industry groups go, airlines having a really strong last 5 or 6 days, making another breakout here today, at least a short-term breakout. Renewable energy, even though energy has weakened of late, renewable energy has not. We continue to see more and more strength. This is the top performing industry group so far in 2019, showing no signs of wear and tear just yet. Food products, one of the areas in the defensive groups leading to the upside. Beautiful move today, making a breakout above that mid-June high. Among individual stocks, apparently Broadcom is in advanced talks to acquire Symantec. Talked about Symantec, how it's been underperforming many of the other software stocks. Well, it never hurts to have somebody talk about acquiring your stock. You can see the stock up 13% today. And then finally, Simply Good Foods Company. We talked about it recently. When you get the breakout in the food groups, you want to make sure you're looking at the leaders in the area. Simply Good Foods Company has certainly been that. Huge last 5 days here on this stock. Another big day today. Look at the volume pouring in. Great performer. All right, Erin, it is the day before a holiday, July 4th. You got any big plans?
Well, actually, July 4th, we're going to hang close to the house, where our new house is very close to the University of Redlands Stadium, where they do a huge fireworks show. So we have a couple coming over, and we're going to watch that. But mainly, I'm going to be getting ready for my trip up to the mothership on Friday.
Awesome.
Yes, so Mary Ellen's going to be going up there with me, and we're going to be recording a few things for our show and for talking technically, so it should be a good time.
Yeah, that sounds like a lot of fun. I know tomorrow for me, I will be out on Lake Wylie, which is just a little bit south of Charlotte, North Carolina. So got some friends going out on the boat. Thought, okay, this would be a good time, kind of relax. I am going to try not to take my laptop and my Wi-Fi hotspot out there with me on the lake. I'm not going to look at any charts while I'm out there. I'm going to actually just relax in the sunshine, maybe have a cold beverage or two.
I hope you will do that. I know it's been stressful for you lately with the whole home thing.
Yeah, I got a little something going on, with the house. So, yeah, it'll be good to get away for a day and just kind of relax on the beach or on the lake. So that'll be fun. Just got to remember to put my sunscreen on.
Indeed.
Yeah. All right. Well, let's get into the action today. What do we got today?
All right. Well, today, I have to say, later at 4:30 p.m. Eastern Time, 1:30 Pacific, Chartwise Women will be premiering. Mary Ellen and I, we're starting this new show. I hope you tune in. Of course, the 4th, tomorrow, no Market Watchers. Just the important thing here to look on this schedule for sure is John Murphy coming in on July 11th, followed by Martin Pring the following week. And then we do have a special week lined up, July 22nd through 26th. We're going to have Relative Strength Week. We will be focusing on relative strength that entire week. Today, technical scans. We're going to follow that up with trading setups, 10 and 10, Seagate Technology, STX for symbol. Then we will move into a scooter report, and our final segment is agree or disagree. So go take the poll, because it is what Tom and I will be discussing, and whether we agree or disagree with the statement in the poll. So go take a look at that. All right, Tom, I know there were a million economic reports today. So let's go ahead and get started.
Yeah, just under 1 million, but I know what you mean. Let's take a look. June ADP employment report. Of course, I always am interested in what's going on in employment. Came up less than expected, 102,000 versus 140,000. Of course, the big non-farm payrolls for June will be out on Friday morning. So we'll get a little bit better picture. I think the market more closely watches that non-farm payrolls. This is a little bit of a precursor, though, and it did come up short, worth noting. Initial jobless claims, just about what was expected there. June PMI services came in hotter than expected, but then the ISM non-manufacturing index came in just below expectation, so a little bit of a wash. May factory orders weaker than expected, and normally I don't talk about revised reports, but this one I thought was worth noting. April revised factory orders, they were already weak, minus 0.8%. Well, they actually upped it to minus 1.2%. So April and May factory orders not painting a great picture here, and I think maybe giving the Fed a little ammunition to lower rates in July later this month. So we'll see. As far as the 10-year Treasury yield goes, because I like to see the bond market's reaction, well, it's reacting about as you would expect with some of those reports, especially factory orders. Continuing its move down. This is a long-term 3-year chart, so we really can't see the candles, but I just wanted to give you a sense of the big drop that we have seen now over the last 9 months or so. Huge move to the downside. And the real toll that's being taken is that our yields are now moving down faster than Germany's. And we had been enjoying for the last 6 years, our yields, 10-year Treasury yield, moving up faster than Germany's. And anytime our yields are moving up faster than foreign countries, it's a signal that our economy is stronger. And when that's the case, we tend to see a strengthening currency. The dollar's been in an uptrend. However, with this continuing drop in the 10-year Treasury yield versus the German 10-year Treasury yield, I think that's still setting the stage potentially for a further drop in the dollar, which would be good for gold. I don't think gold outperforms the S&P, but I do think gold is in a better environment right now than it has been in a while. We're getting a little bit of a short-term pop on the dollar here, just here over the last couple of days, but I would not be surprised to see it turn back down again. And if it does, and this yield in the U.S. continues to drop versus Germany, I think this could combine to have the effect of seeing gold continuing to move up in the near term. I'm not a big fan of gold longer term, and I'm certainly not a fan of gold on a relative basis to the S&P 500. I don't believe it outperforms going forward, but we'll see. But I do acknowledge in the short term, things are set up a little bit better for gold. We want to keep an eye on that. All right, I wanted to go into, there weren't any earnings reports out, and things are pretty slow on the earnings front right now. We'll start to pick up again here in another week or two. But you can see some of the industry groups I wanted to just point out that I think are interesting. So let's start with the automobiles. This is a 2-year weekly chart. And I think if we started here at the top and annotated and drew a trend line, you would see that this move up is literally coming up and testing this trend line. Also, look at it. We're right at the 50-week moving average. We have not closed above the 50-week moving average in over a year. So we are right up against it. This is going to be a telltale sign, perhaps, of what the autos will do in the second half of the year. Can we get this breakout above the 50-week moving average? Next up, apparel retailers. Again, looking at a longer term chart, this is a group that did extremely well in 2018, had that huge drop in the fourth quarter, rebounded, fell apart again in May. You can see anytime there was trade discussions, the apparel retailers were getting hit to the downside. Notice that we've been strengthening off those May lows, but still we can't get back up above that 20-week moving average. I think this is an area we want to really focus on and watch. Footwear. I've been talking about footwear kind of being no man's land. Not sure if it's been bullish or if it's kind of turning more bearish. Well, we're starting to strengthen again. And I think this is a really good sign for the footwear group. We are now at about a 2-month high. We're at this gap resistance area. Can we get through? And then obviously if we can break above that April high, that would put us back to some new highs for 2019, something to keep an eye on. I mentioned earlier at the top of the show, the food products group. I think it's worth mentioning here. We've got it breaking out to a let's call it a 1.5-year high, taking out the highs that we saw in the summer of 2017. If that can continue with a weekly PPO pointing higher, I think that is a really good signal. The renewable energy group mentioned that this is the one area of energy that has been unbelievably strong. Look at this chart in 2019. It's hard, to outperform the S&P without having maybe a renewable energy, or maybe put another way, it's a lot easier to outperform the S&P 500 if you have a renewable energy stock in your portfolio, especially one that is outperforming. Medical supplies. This is a group that has been strengthening again in 2019, had a very difficult end of the year, fourth quarter, but we are rapidly getting close to the high that was established back in October of 2018. Notice as we pull back, these rising 20-week EMA tests have been pretty solid in terms of holding, something I would continue to watch in the second half of 2019. Next up, airlines. Airlines all of a sudden having a big move, but 2019, we have seen airlines move up only to kind of run out of fuel, if you will, between this 270, 275 area. February and April, both those months went up this area, couldn't get through. Here we are again, trying it again. Can we make that move? PPO looks pretty good here. I would, that's one of the parts of the poll question for today too, talking about transportation. It's been underperforming the S&P 500 for quite a while now, and it's at a 10-year bull market relative low to the S&P 500. So depending on how airlines go here, this could impact whether or not we begin to see transports outperform again. Let's do one more here. I want to pull up the software group. We know software is strong, but did you know we are making new highs again? Software breaking out, looking strong. Very difficult to not have a software stock in your portfolio. All right, let's move on to the scooter mover of the day. Now, this one was right at the bottom. Here it is over here. It's close to the bottom of the movers in the large cap space, but you can see its current scooter rank is just 31.7. So we know that it hasn't been a great stock, but it is starting to strengthen, and I think this is worth noting. The scooter is now higher than it has been at any point in the last 5 or 6 months. Volume is coming in. We've broken a downtrend line. I tell you, off this downtrend with this double bottom, a descending triangle, I thought this would break down to the downside. Instead, as we enter a very bullish month for biotechs, the stock is actually starting to trend higher and is beginning to show a little bit of relative strength. So if biotechs can make a relative breakout here, and certainly make an absolute breakout above the high we just saw a couple weeks ago, this is a stock that you might want to consider. Now, I like some other biotechs better, but this is one that seems to be turning the corner here technically, and I like this volume on these moves to the upside. It seems like volume is coming in here as well. So Nectar is your scooter mover of the day.
All righty, let's go ahead and move into some upgrades and downgrades. And it was really light today. Yesterday there was just a huge long list of downgrades. Today it was just really very few. So I'll run through them. A lot of them don't have a whole lot of volume, but I thought that we should look at even just a few of them. So I'm going to start off with not the Dow. We're going to start with GOL. I'm not going to pronounce that because I know I'll pronounce it wrong, but it was upgraded today by Goldman from a neutral to a buy. And you can see we've got a really nice little breakout going on here. Let's get the color here to where it's real obvious. Choose that blue. There we go. So we've got a really nice breakout. Let's get support and resistance. But here's what I'm talking about as far as the breakout today. All right, so we are up 7.5% on this upgrade. So certainly, it's making quite the move with this gap up. I'd just be a little bit concerned if, number one, we couldn't stop trading close above that 1793 area. If we can't do that, I wouldn't want to be in this. You've got a PMO sell signal, and that gap is likely to close. I would look at it as an island formation, possibly lining up here. But if we can hold above, close above that 1793 area, it might be worth holding on to at least into a watch list. All right, next one up is CNK, Cinemark. And this one was upgraded from a neutral to a buy. And we've got another gap up here, a 2.75% move to the upside on this upgrade. Notice the PMO is setting up right now. It still doesn't have that buy signal, but it is very, very close. So I like that setup. But let's look at some of the support and resistance. Here is what I would look at as overhead resistance, lines up with lows back here from April and May. Indeed, short-term overhead resistance as well at the top we saw back in June. So I would be looking for that move to the upside. The only issue is I think we could be in that same island formation predicament. However, notice right here, there's your 20-day EMA, and we are trading above that 20-day EMA right now pretty solidly. So I would still look for that move to the upside. I'd say your overhead resistance sitting at that 38.85 area. Next one up is going to be gold, Barrick Gold. This one was upgraded today, and I know there's, gold is starting to consolidate right now. But I do still think that gold looks very positive, and obviously that's going to work well for Barrick Gold. Really nice move to the upside on this gap. Looked like a breakaway gap, but at this point, with us pulling way back here, I mean, we didn't fill the gap, and I think that's positive before we move back up to the upside. But that is an area of vulnerability between, in that gap. Again, there's your 20-day EMA in the green, and it's, price is well above that. And we could be looking at a possible flag here too. So let's just mark that up from way down here all the way up to the top. And then there's your flag right there. And if it is indeed a flag formation, you would expect if we got that breakout up here above 16 or so, we should get a move to the upside, the length of this flagpole, which of course would be very nice. PMO is a little on the overbought side, although it is turning up. Something to consider there. And OBV volume does have me a little bit concerned when I look at gold. Barrick Gold, that is. All right, next up is Inogen, and this one was downgraded. Let me find it here real quick. Inogen was downgraded into a neutral position. We are seeing not a whole lot of great action here when you get in here past that gap. And then you have another gap down. This is your breakaway. This is your continuation, really, after the rally breakdown. Look at all the volume that came in on that. And your area of support, of course, is down here at those lows at about 62.30. We're moving our way back down there to make that possible move to the upside. I mean, if this one was going to do something, this is the time for it to do it. The PMO, however, didn't even reach positive territory, and it is starting to head back down for another sell signal. So maybe put this on the watch list, but look at this 5,200 gap. I mean, this stock has been in a bear market configuration for a very long time. So not too surprising to get that downgrade. All right, Tractor Supply Company also downgraded today. And we've got, you can see that overhead resistance is sitting right about where it is trading right this moment. You can see at 109.88. We're pulling back through there. We're filling the gap that we had previously. That might leave us open for a move to the upside. Let's go ahead and look at support levels. There's your short-term support. And of course, there's your what was overhead resistance, gapped up right above that, and then is starting to pull back down. So, on this neutral downgrade, I mean, I can see a neutral. I can see this trading range lasting, especially after a failure up here and a closing of that gap. PMO is still rising right now, and it is above zero. I mean, that breakdown is what would concern me the most of Tractor Supply on this downgrade. And then finally, last one is Royal Dutch Shell was downgraded. Well, let me see if I can do this right. RDS/A. That's how we do it here. All right, so let's get our support resistance. There's what was our overhead resistance, broke out above it, was holding above it, was, hanging in there, but now has broken back down into, out of that. Well, you could look at it as kind of a large island, really. We're getting ready to cover that gap. We haven't quite done that yet, but it's very close to doing that. I would be looking at the breakdown of this rising trend line. And if we can get a bounce off of there and then make our way back up, but look at PMOs turning down, looking for that sell signal. That's all I have for the upgrades and downgrades. And there they are listed. Like I said, that was it today for those. So not a lot to really look at as far as that goes. All right, we'll be back with technical scans after this, so stick around.
I think StockCharts is a fantastic platform, especially the fact that it's web-based. So on the car on the way here from the airport, I was bringing up my cell phone and I was looking up really beautiful charts to get a read on what happened. I looked at the market summary page and then I'm drilling into individual charts.
StockCharts is unique in that you've got all of the perspectives of many of the technicians.
A sincere desire to really help educate investors, and that's really critical.
StockCharts is unique because we combine the commentary, the education, as well as the tools in which you need in order to analyze the markets.
All right, we are back with technical scans. I know that I'll be sharing some of my favorite scans, and I know that Tom will be doing much of the same. So I'll get it started. I just want to show you that you can, of course, get to the advanced scanning workbench right there. But I wanted to go down, and if you have the scan tile on your home page, you can also go here if you're not really comfortable with writing your own custom scans. We do have predefined scans that are already there and ready to go, and you can even borrow from them. Just click on it, and you're going to get to see right up here. You can edit it, and so it already sets up the code that you want. So you can just copy and paste that if you want to use that to get started on what you want to do with your scan. But I'm going to start off with my focused PMO scan. We look usually at my general scan, and honestly, this is the same thing, only I have it set up that I can concentrate on or focus on certain sectors. And how do I figure out which sectors I want to concentrate on? I go to our handy dandy sector summary, and you can also get to this from your dashboard, or even easier, you go to the charts and tools page and there's your sector summary. All right, so at this point, what I wanted to do, I'm not wanting to look at what's happening just right now as far as the sectors. I want to get more of a feel with my PMO and the chart patterns. So what I do is I click on the candle glance at the bottom of the page, and then I can see in candle glance with my candle glance style what's going on with all of the sectors. And basically I can look at really the setups going on now and which sectors look like they're starting to really outperform right now. And I selected of them. I ended up looking at, I really liked comm services. We got the buy signal. It's still heading up and it is not at all overbought. Same thing with technology, got that crossover and it's still not at all overbought. And then I was looking at consumer discretionary. We had a little bit of a pause here, but now we've broken out again, and look at the PMO giving us a little bit of a bottom above the signal line. Now, I think you could certainly make a case for some of these other sectors. Staples has a nice breakout going on here, so does healthcare. But some of the reasons I didn't pick those in particular was the PMO was getting overbought on both of these. So, I just want to set myself up for the most possibility for success. So I decided to concentrate on XLY, XLC, and XLK. So discretionary, comm services, and technology. So I put those into my custom scan. Now, if you want to do anything with these scans, you don't have to know coding necessarily, because you can add the scan components down here. So when I'm focusing and I want to add a sector, I can just come down here under sectors and industries and punch in what I want. There is the comm services. So if I decided I wanted to add staples maybe as well, I just put that in, I hit add. It always adds it to the bottom. So I want it to be near the top. And I'll put that right here. Now, one of the things that you need to look at here is the ors versus the and. And it's simply think about what you're looking for. You want stocks that are either in cyclicals, comm, or technology, or consumer staples. None of the stocks can be in both. So having an and is just not helpful at all. So you'd need to add your or in there like that. But I'm not concentrating on staples, so I'm going to take that out of my scan right now. I'm looking at a decent size volume on what stocks I want to look at. PMO, I want it to not be above the signal line. I want it to be turning up for the past 3 days, but not yet giving me that buy signal. It could be a way to maybe get in on something a little bit earlier, but yes, you have to realize risk is a little bit higher when you're not waiting for the actual crossover. And then I like the 20 above the 50. Day EMA above the 200. That's a nice configuration as far as moving averages. So when I run this scan, I came up with 14 entries. And I always use my scan dump to dump them in there. I'm not going to do all of that right now. I'm not going to go through the candle glance of those because I really wanted to concentrate on my scans. And the other one I was going to share with you is my momentum sleeper scan. And this one I made special in that I used pretty much the same parameters for the PMO. I want to have a faster PMO though. The PMO's regular settings are 30, 20, I think it's 10. I get it confused. But in any case, I wanted to move it into a configuration that is like the MACD. So it speeds up the buy signals on that. You'll get a little bit more, less lag. But I don't want to use it as my regular scan because I still like to invest based on the slower or default PMO. This is only to help me get some candidates in there that look interesting. And when I run that scan, I get 40 results. And again, going to scan dump, I'll put them in that transient chart list, and then that's when I can get to it and start going through stuff. And there we are. And so then you can go in and start looking at the actual stocks that came up on your scan. What kind of scanning are you doing right now, Tom?
Okay, well, I tell you what, I'm going to start. One of the things I would do in trying to come up maybe with some individual stock trades off of scans is I keep a relative strength chart list. And so right here, I've got it on my dashboard, and I've got it on here as one of the, if you use this dashboard preference here, you can use this as an additional data panel. And then, of course, you've got your chart list panels. So this chart list panel down here allows you to take any of your chart lists and basically feature them right here on your dashboard. So it's a way of organizing and getting a lot of stuff together that you really want to take a look at. And so what this does for me is it just tells me where the relative strength is very, very quickly. So I've got every one of the industry groups versus the S&P 500 within all these different groups. And so one thing that I would do is maybe look down this list. Now, I keep a pretty close eye on these. I know which ones they are, and I know which ones are kind of interesting. And when I went over the market update earlier today, I talked about the food products group and how it was breaking out. Well, it's breaking out on an absolute basis above some recent highs. But when you look at the relative chart, take a look at what it's doing versus the S&P 500. So this is a case of, okay, yeah, we're getting this breakout to a new 52-week high on the group, and you would think, oh, that's great. And it is, except it's still significantly underperforming the S&P 500. So if I looked at this breakout and I said, well, I want to play the breakout, I want to trade an individual stock, but I want to get one of the leaders. Well, one way we can do that is by going back and setting up a scan to do this. So I'm just going to go in and say, okay, I want a new scan. I'll show you how quick you can do this. So you go down to sectors and industries. Under the consumer staples, food products, that's the one I was just looking at. You add it. There it is up there in the top. Makes it very simple. Now let's say I want relative strength. Well, scooters, that's an exclusive area, exclusive tool here at StockCharts. But if you add scooter, it's going to give me by default any stocks within this food products group that has a scooter over 90. Now keep in mind that food products hasn't been a great group. So if I keep that at 90, I'm probably not going to see a lot. So I'm just going to lower that to 70. And then I'm going to check my syntax, which should be no problem. We're good. We run the scan. And here are the stocks. There's 15 of them in this group. I sort it by scooter order. And actually, there were 5 of them here that were above 90. So if I'd left it, I would have had a scan of 5. But instead, I go through this entire list. So I look at the top one, big scooter, but look at the volume, trading 16,000 shares. That's not going to be enough for me. It's on the over-the-counter market. I'm not interested in that. But let's go down to the next one, much higher volume, still a 95.4 scooter rank. You know you got to have a pretty good stock if it's in an area of the market that has been underperforming, and yet it's still ranked basically above 95% of its peers in the mid-cap space. That's how the scooters work. They rank from 0 to 100 within market cap. So it's either small cap, mid cap, or large cap. So this stock is a really great performer among mid caps, even though it is in a pretty challenging area of the market. Well, here's the chart. I can't argue with this. Beautiful move up, pull back. We got a little sideways consolidation. Look at this breakout, the volume coming in. So quickly going from food products and seeing that the food products is one of the top areas of the market today. And then just heading into the scan page and quickly just taking a couple of those predefined areas, putting it on a scan, running it, and quickly I can zero in on some of the areas that are really strong in this space. So let's go back and take a look at the next one, Pilgrims Pride. And again, you got a stock. Now I'm going to annotate this because even though it's not breaking to a new high, I think we've got a nice move to the upside and uptrend. And then if you connect these highs and these lows, you got a bullish wedge. So as the volume was pretty strong to start July, we were making a breakout of this bullish wedge. I think this is a pretty nice stock. Now, the way I would approach a stock like this, however, knowing that the overall market has been, or the overall industry group has been weak compared to the S&P 500, I want to make sure I keep my stops in play. So here, I'm back above the 20-day moving average. If I'm truly beginning to uptrend again, I might use that 20-day moving average as my stop to the downside because I don't want to roll over again and start this downtrend. Got to recognize there was some volume coming in on this selling. So if I start to show some weakness and fail to hold, say, the 20-day moving average, that would be something I think I need to pay attention to. Let's take, excuse me, look at one more. I'm going to pull up that Simply Good Foods company. We talked about this one recently. Look at the volume coming in, this huge move to the upside. And if I pull up a relative chart, you can see the long-term, the absolute chart's been strong, but look at the relative strength. The group is making this breakout to a 52-week high, and here is one of the strongest stocks within the group, just based on the relative ratio here. It's outperforming the S&P, even though its group is not been outperforming. Look at the group on a relative basis dropping throughout June, and SMPL outperforming the S&P in that same period. Great volume. I think this is an example of how you can use the scanning feature, the tool at StockCharts to quickly uncover some areas of the market that are starting to make a move. So that is here comes our summary for our technical scanning area. And you can see Erin went through her custom scan. I showed you just quickly how I can take an industry group, use the scooter, which is a nice relative strength tool, and quickly identify some of the best stocks within that area. All right, it is time now for trading setups. This kind of fits right in with what we were just talking about, but maybe some more individual stock attention. What do you think here for trading setups, Erin?
Yes, this really did come in right when we needed it to. Let me go ahead and share what I'm looking at. So we went over those those scans in the previous segment, and all I did was pick out the ones in those scans that I saw that fit my my criteria. If I were to go out tomorrow or today and actually buy a stock. So with trading setups, I think we were going to pretty much show like how we find those stocks. Well, we did that in the last segment. But then once we look at them, figuring out what are targets and what are the stops. I know we get a lot of questions about how do you set a stop. And, it's an individual thing. Tom, I know you probably agree with me. And I feel like it does depend a lot of times on your trading horizon. So let's go ahead and we'll start with the first one, ATUS. This one is in the technology telecom equipment space. And what I did is I noticed you had this sort of double bottom here setting up. It's not a textbook double bottom in that it didn't come off of really a decline before. And it did set some new lows, though, in the trading range that we've been in since April for ATUS. So I like this one. If I wanted to get in early, I might just do that because I have that PMO buy signal right now. And you can see the volume. I like the way the volume has come in. Got all that big volume to the upside, came back, had a down day, but look at the volume bar was so small. We only got a little dip in the OBV, and now we're back setting new highs for the year on the OBV. So how do I figure out my target? Well, when I'm seeing a trading range on the daily chart, and I'll go back and look at maybe a longer term version of this, but just as a short term trade, I see a trading range and maybe I don't have overhead resistance at a previous high that I can go to. So my rule of thumb is to take the length of the trading range and I pretty much add it to the top. So we're looking at about a $2 trading range, and at $25 I would be setting my target for about 20. At 25 I'd set my target for 27 on a short-term trade. And as far as the stop, if it were more of an intermediate term thing, I'd probably just set my stop down here below the support level or just above it to maybe beat out all the people who are going to try and sell as soon as it loses the support level. But in the shorter term, I think these are the kind of stocks you want to get in where you can set your stop right there at that 20 or 50-day EMA. So you've got really decent sized upside potential here in the $2 range, but we set our stop closer to 24, about halfway into the trading range. I'm going to look, just because I'm curious, at the monthly chart just to see if we aren't at those all-time highs. This one hasn't been around long enough to get us a good one there. Let's nope, that's the wrong one. My style button's over here. All right, so we're not at all-time highs. So honestly, I set my stop just on that daily chart at $27. And guys, I seriously had not looked at this weekly chart and noticed that $27 range lines up almost perfectly with these lows that we saw when it came out initially in 2017. So also notice that weekly PMO turning up as well. All right, let's look at some of these others real quick, and then I'll pass it over to you, Tom. KB Homes was on my list. This one, we had a nice breakout here, and I would be looking for my target at least up to that 2750 level. I'm going to go ahead and pull the weekly chart up on this one because, as I suspected, these aren't all-time highs, so we have a lot of upside potential on a breakout here. But I would be setting, we'll go back here, I would be setting my target probably, again, I look at this as sort of a range here that I had. Why did I have this one down here? Let me fix that. It doesn't line up with anything of interest. There we are. That'll line up with my short-term lows, close to that top back there. So my stop, I would probably set it again at that 2050 in the shorter term, maybe bring it down to 2450, closer to the 200-day EMA if I want to stick it out for a while, knowing that the upside potential here could be really good. So that's how I would set this one up. But these are the ones that come up, and seriously, these are what I trade, is what comes up in my scans. Let's look at Man H. This is one I've talked about before. PMO turning up. We have a breakout going on here, which I think is healthy. Look at all of the indicators are very nice here. So I have the breakout, and I would be looking, let's see if we can find some overhead resistance. And there we go. We've already gotten above the overhead resistance back here from 2016. I think that's really good sign. And our upside potential here, my target, 77.50. Heck, I want to see it get back up to those highs back in 2015. And I think that the setup is pretty nice. Look at this flag formation that we got a breakout from. That's a pretty nice size flag. And the flagpole would definitely take us up above that top. MTG was one that I saw similar to KB Homes, getting a breakout from a declining trend. This one I find real interesting because it's sitting there. It's broken back up into this trading range that you can see that we had here. And now we're breaking that declining trend. Great volume coming in. We get the turn on the PMO. Doesn't quite have that signal, but look at upside potential. My target would be at least 1450, and honestly, I would be looking at 15. As far as the stop goes, 200-day EMA here for maybe an intermediate term investment. I'd probably tighten it up to about 1330 maybe on a shorter term investment. That would be the setup for that one. And SeaWorld and Zynga were the other two. Nice setup here with the PMO. You can see that I had really nice setups on the indicators. Target, of course, would be up here at that previous top, but I suspect if we wanted to go into a more intermediate term investment, we can see that SeaWorld, when it did come out initially in 2013, there's certainly room for upside. But I would be a little bit nervous around that 3250 level. But if I got that breakout and it follows through on this buy signal on the weekly chart, I think that's a pretty good intermediate term investment. And then Zynga right here broke from a declining trend, and it's already backing up toward that 20-day EMA. And yes, the PMO has stalled out a little bit here, but I would be okay with that because we're testing the 20-day EMA. I could set my stop very tightly at $6 at that 50-day EMA. Usually when we're looking at some volatility on a stock, I prefer not to trade those in the intermediate term typically. So I would be looking at this certainly as a short term, setting a stop around that $6 level, maybe a little bit higher. Like I said, I don't want to be part of the gang that everybody tries to sell right at that point, because I don't know if I'll get a good a sell point there. And 660 would be your upside target. But I suppose if you looked at the weekly, you might find a higher target. Nope, that's all-time highs. It looks like for Zynga, I would be looking for a challenge of that, and that would be my upside target, 1655.
Yeah, one thing that's really interesting with that chart, it's part of the toys group, and toys have been really struggling. So with Zynga doing so well, it's been a great relative performer. And, if toys, they did make the breakout recently, if toys continue moving higher, yeah, you can see there on the toys, that first chart below the price chart. Yeah, right there, breaking out above all that prior, 2019, those prior highs around the 840 level. We finally got through that. And so when I see something like that, if I'm going to take a chance, it would be with a stock like Zynga that's been a relative leader, as you can see on those two other charts just below for the past, 8 or 9 months or so.
Yeah.
All right, I am going to take just a little different approach, but let's first start the same way we started the last segment, except with one little minor exception. Here I was looking at the relative strength. One of the things I do to find some really good trade setups is I like to find industry groups that are strong, but actually are pulling back a little bit, because I like to buy on weakness. I don't like to buy on strength. So I would be looking at this. I'm going to pull this relative strength industry group up by summary. And so now I've got them all. I've got all of them. I've got a summary of, I think it's 104, 105, something like that, industry groups. And I'm going to flip it. I'm going to take a look at the percentage change losers. So these are the worst performers. And if you look, you're going to see a lot of XLE industry groups. That's energy. XLB is materials. We've been seeing this for the last 8 years. I have no interest in these. But occasionally you'll see some pretty good industry groups that are just kind of being tossed to the side. I mean, semiconductors kind of, that's a little bit more volatile right now. I don't know. Some of you might find some interest there. Toys has been strong. We just talked about toys, so toys pulling back there a little bit. But I'm going to go down here a little further to defense. And defense stocks, I've been pretty bullish, and we're seeing a little bit of relative weakness here today. And when you look at the relative chart, and I'm going to drag this out a little bit. This is just 3 years. Let's go through the whole bull market. And what you're going to see is that defense stocks from 2013 to early 2018, I mean, you wanted to own defense stocks. You wanted something in your portfolio that pertained to the defense area. And then we went through this period for about a year. We just had some relative profit taking. And now you can see we're back above the 20-week moving average, and the 20-week has moved back above the 50, which was the same configuration we had here for 5 years. So I think defense stocks are potentially, and you can see that weekly PPO going positive again, which, by the way, it remained positive for 5 years. So I think defense is an area that we want to at least consider, okay? So I go back, let's go back to that shorter term chart. Now you can kind of get a better sense of this pullback. It's really this downtrend that's broken. We got this double bottom in. We took out that intermittent high right there. I think that this is a good looking group. And you can see since the beginning of June, on a relative basis, this is an area that's been pulling back. So what do you do with that? Well, we already went over the technical scans, but basically I did the same thing as I did with food products. Pulled up the fence, scooters greater than 70, and here was the list that I could quickly zero in on. Now, I own Kratos, but if I didn't own it, it's one that I would definitely keep on my list because I think you have a nice little cup and a handle and a breakout. So if we revisit that breakout just below 23, I would like the stock for entry if I wasn't already in it. You can see it's holding its rising 20-day moving average. That's around 22.30 or so. I'd maybe keep a stop below that 20-day moving average. And you could even enter from 23 down to, 22.30, down to that 20-day. That would be a pretty good entry area. But look at the volume coming in. This is not only performing well in terms of price, but there's accumulation taking place as well. A lot of good things going on under the surface here with KTOS. The other one that I would mention, I don't want to go over all these, but Lockheed Martin, I think, is another one that has been a really strong performer going up. And if I pull this one up on a relative chart, look at Lockheed Martin relative to the defense group. So it's a very strong stock within defense. It's going up today, even with the overall group struggling. And you can see we haven't broken out the new highs in the group, but Lockheed Martin has. Same with Kratos. So you're getting the best of the group. And if the group turns back up, then you're going to be in a position to ride it with a couple of best stocks. So that's kind of how I take a look at that. Now, another area I wanted to do the same thing with was broadline retail. So over here on this list, I think if I scroll down a little bit further, I'll find broadline retail. Here it is right here. Now, broadline retail has been stronger for a longer period of time. We had a huge move on a relative basis, 2018. Sideways consolidation. Look at it starting to move back up, holding that rising 20-week moving average, which is now back above the 50. This is a group that I think is poised to go higher, but on a relative basis, it's struggling a little bit today. So when I do the same thing, I run the same exact scan. I just bring up broadline retailers, scooters greater than 70. Here are the 4 stocks that are listed on here. So you've got a couple of choices to make. I don't want to look at all of them again, but let's pull up JD.com. JD.com, after moving up and testing this high around 31, pulls back, holds on to support, and now look at the move. Volume's been picking up. We actually got up to 32, so we're starting to set new highs. Beautiful move to the upside. The other one that I wanted to bring up is Target. I think Target's another one I think looks really strong. Target, beautiful move up, barely pulling back at all. I think just really a flag pole followed by a flag. I think you get a breakout above $89. I would expect another big run here in Target. Great volume trends. And once again, if we pull up the relative strength, you will see that on a relative basis, this stock made a huge run back at the end of May, second half of May into early June, pulled back. But if we start to turn back up again, look at the volume. Right now, it's showing relative weakness only because the stock's consolidating. It made a huge run on very heavy volume. So while it's been consolidating, the group's gone higher, and that shows relative weakness. But as soon as this starts to turn back up again, especially if you see the volume start to come in, we get this breakout. Look back to a one-year chart. This 88, 89 level is a big, big level. So Target is another one that I would be watching. I think you can buy it on the 20-day or on a breakout. And I'd probably keep my stop in on close below the 20-day. So those are some different areas. I do want to mention one other thing. This is the strong earnings chart list. So another thing I use, and I only trade off of this chart list, 280 stocks in here. So if I wanted defense, I would type in defense and 2 stocks quickly come to me, Katos and Lockheed Martin. Now, the significance here is that I know these 2 companies have recently beaten Wall Street estimates as to revenues and earnings. I like their charts. They're generally going to be strong relative performers. And if I go into broadline retail, well, you can see right here, Target's on the list. The other one, JD, was not on here, so they didn't beat their earnings. But Target is on this list along with Amazon and Ollie's Bargain. The reason I mention all of this is I want to just point out I'm going to do a webinar with John Hopkins at Earnings Beats on Monday. He's running a July 4th special right now, $4 for 4 weeks. And one of the things that he will do is I can't send this link out there. I can't send out my strong earnings chart list because I left Earnings Beats. That's one of the things I can't do unless I get special permission. But he's going to send you a link to that strong earnings chart list for this special, 280 companies. And if you're a StockCharts extra member or above, he'll send you the entire chart list so you'll have it in your account. You got to be at least an extra member above, though. So if you're below that, you might think about upgrading and then contacting John for that to get that special. But wanted to mention that. Just go to earningsbeats.com, click on that 4th of July special link there, and join me for that webinar on Monday. But that is the trading setups segment. And there you go. Erin had a number of individual stocks, showed you how she would approach those. I gave you a little bit more of a process that I go through to find some trading setups, and then talked a little bit about those individual stocks. Okay, I'm exhausted. I'm going to take a break. Erin, I'm sure you have the RRG ready for the 10 and 10.
Actually, I don't have it ready. I was in the chat room. There were a lot of questions about the previous segment. So I was in there answering a lot of those as I grabbed the symbols, but I do have our first symbol, STX, and I will be looking at the most popular in the chat room for the second one. And by then I'll have all the others ready.
All right. Let's pull up STX, take a look at it. I'll annotate this for you. Again, I like to, it's one thing to look at the absolute chart, but one of the first things I do is just go down and just get a sense, is this a leader? And when I look at it, I'm just not overly excited. I mean, it's okay, but you can see with computer hardware going up, the stock's been going up, but it's just kind of flat with the group. So it's going up because the group's going up, but it's not going up because it's one of the better stocks within the group. So I would probably avoid, I'm not saying it's a bad stock. It's not going to be one of my favorites. So I would be watching overhead resistance if I was trading it. You've got a major gap resistance here. Look at the gap down, heavy volume. As soon as we got up to that 50.5 level, we backed off of it. So anything close to 50.5 to the upside is going to bother me. I'm probably going to take profits, see if we can get above. But if I don't have a relative leader, I'm not going to necessarily assume that I'm just going to go right through that resistance level. So I would, for me, it's more of a hold or maybe an avoid to try to find something that maybe looks a little bit better within this space.
All righty. Next one up is going to be the most popular, and it happens to be Tandem Diabetes, which it is a lot of times, TNDM.
Yeah, this one just continues to consolidate. With the group really strong in June, you can see the relative strength has come down, but so far it's holding on to a relative support level. I'd probably keep an eye on that along with the recent price support. But there you can see the low that was established, relative low that was established in April, and see how we're still holding on to that. And it's all happening while we're going sideways and just simply sideways consolidating. So sometimes if you're not patient enough, you get out of these stocks a little bit too soon. This has been a very strong performer within this group, and it may just need a little bit more time. Couple levels that strike me. I think the breakout here on heavy volume took out this double top. You can see when we came back down here, we held it. That's too much room for me, though. I'm not going to buy a stock at 63 and hold it to 52. So I would probably be a little bit more interested in this 60 level, maybe even the lows before that, and then maybe along with that 60 level, 60 to 62 maybe. Give it that much room. If that breaks, and then especially if this were to break, I think I'd look for something else. I don't think I would take any chances because it is starting to underperform. And this is a group that's really been taking off, and we've been consolidating for a while. One last point, though, and this is something we really shouldn't ignore. This is a stock that ran from 27 to 75 in about 4 months. So, it probably makes sense to give it a little room, allow it to consolidate a little bit, and not give up on it quite so soon.
All right, let's see. The next one up is, actually, I think this was your Monday setup pick, LHX.
Yeah, it had a merger, and I failed to mention that on Monday, but LLL and Harris Corp became L3 Harris Technologies. And I think I think it was after the show we were looking at it, Erin, and I think around the noon or the 12:20, 12:25 time when I was doing the analysis, I think it was still showing that prior day, but it was trading at around 184. So it's still trading about where it was. It did come down, but there are a couple of key levels here. I still like this stock, and I still like it quite a bit, actually, because it is in the defense/aerospace area. I think as long as this gap support holds, I'm okay with it. We've got close on that move down on Monday, got down to 176 and change. I would maybe use around 173 as a stop. I think there's your trading range, and I think ultimately we're going to move back up. When I talked about LLL, I remember talking about the fact that the stock had a higher price, lower PPO, negative divergence. So I was actually expecting a move back down close to 185. It went a little bit over, but I still think this recovers. So I like it here. I think you're going to get a move back up to 200. Could you go a little bit lower to test this gap support? Yes. In fact, 173 would be my best entry because I think you can keep your stop really tight there.
All right. I like this chart. Skyworks Solutions, SWKS.
Right, SWKS. Well, I like it in the short term, and a lot of the semiconductors have gotten a boost here of late. A lot of them had that big gap up on Monday, and so we're seeing that with Skyworks. We're pulling back. The relative strength is what continues to bother me. So, and the volume was big on the way down, not quite as big on the way up, but we have improved on the chart. So I would say this. I think technically, on an absolute basis, the price is looking much better. The action's looking much better. I think I'd watch gap support here and these moving averages. So let me get an arrow in here. As long as that holds, I'd be okay. The downside, what bothers me, is looking at this relative strength line versus the semiconductors. So if you want to own a semiconductor, one of the problems I have here is that you've got a relative laggard. Just a month, 6 weeks ago, it set a new 52-week low versus the group. So I think there are others out there a lot better. I like Applied Materials. And there was another one, IPHI, that just recently broke out. Xilinx is improving again. NVIDIA, some of those others, I think, starting to show a little bit more relative strength. But this one's okay. I think it's going to need cooperation from its industry group, though, to make money.
All right. Next one is Booking, BKNG. I think this one was a seasonal favorite in the summer. I could be wrong.
It's the early part of the year. It's the first 5 months of the year.
Got it.
That just blows things away. Didn't this year, which was a little different than normal, but last 20 years, it's unbelievable. But it is rising, looking much better. The group has been strengthening a little bit. It's up near about a 4-month relative high, the group travel and tourism versus the S&P. So we're starting to see a little bit more strength here. I think there's a lot to overcome on this chart, though, in terms of overhead resistance. And as we mentioned, the the seasonality would actually support not getting involved in this one in the second half of the year. This one has a tendency to do much better in the first half of the year. So, I don't use seasonality as my primary driver, though, when I'm looking at a chart and deciding whether to invest. So if it were to break above 2,000, I think that would be a very bullish development. But be careful if we go up and break above these levels intraday and fail. You can see what's happened in the past. We get up there, we can't get through, and then we roll right back over again. So I would just be a little careful here. I'm not a fan of buying it on the stretched basis that got right now.
Okay, let's see. Next one I'm going to give you is Kohl's.
All right. KSS, right?
Yep. Sorry about that.
That's fine. Yeah, I'm not a fan at all. Here's the apparel retailer group. Apparel retail versus the S&P down. Kohl's versus the apparel retail down. Look at the move down. Look at the volume coming in. And look at the failed test at the 20-day, which is exactly what I'd expect. It's probably so far down on its momentum oscillators that the momentum oscillators are starting to turn back up. But that's because it's hard to keep up this kind of relative underperformance and negative momentum. Price action, the volume still speaks volumes to me. I would stay away from it. I think that there are so many other stocks out there better. I don't like trying to catch a bottom and a falling knife. I think that if we do at some point get a bounce and can get through the 20-day, I think maybe we get back up into the mid 50s, but that would probably be more of a pipe dream. If we got there, I definitely would be out of the stock. So I don't know. I don't like trying to catch these bottoms. I think we could see a 20-day test, another swoosh to the downside. I would avoid.
Okay, how about Bandwidth? It's a telecom company, BAND, Band.
Right. Now, I like this one a lot better. Relative strength, you can see doing much better. I think it's just consolidating. There is a shooting star candle off the uptrend that marked the top. We haven't been able to get above 80. So I wouldn't be buying it here because I think we're closer to the upper end of the range. But I do think eventually we break out of this range to the upside. So I would be watching 70 to 80. I think that's the trading range. Good volume in here. The question is this distribution or is it reaccumulation if you're a Wyckofian? The next move, I think, will tell us that. If we get a breakout above 80, I think that would be very bullish.
All righty. This one is in the apparel retailers, which has been really beat down. But I got a buy signal here on Kohl's, KSS.
We just did Kohl's.
Oh, gosh. It's one of those days, isn't it? JP Morgan.
All right, JP Morgan. Of course, in the bank area, these stocks are starting to perk up a little bit. And JP Morgan is one of the better stocks within the banks. So I don't know that I'm a fan yet of the banks because of this relative downtrend. But if I had to pick one, JP Morgan, I think, would be one of those that I would look. I think PNC is even better. Let's take a look at the relative chart and also Ally, by the way. We talked about that one. ALLY is probably better than all of them. But I would maybe be looking at this as a trading range for now, down around 105 up to about 115 and change. Maybe even 116, maybe raise it a little bit there. We're in the upper end of that range, so would I buy here? No, I think we're too far away from the 20-day, too close to resistance, but this is one that I would probably keep on a watch list.
Okay, let's see. Let me try and give you a new one here. How about ATR?
ATR. Another breakout. I can see volume sometimes isn't very heavy. Even on this heaviest day here, it only did 800,000 shares, which is okay. But when that's your heaviest day or second heaviest day of the last year, a little bit of a problem. Looking at the relative chart, I like it. I mean, anything that's going up left to right on here very quickly and visually, I like what it's doing. So then the only question is if I pass or if I overlook the fact that the volume's maybe not quite as heavy as I would like, and I'm just looking at the price action here, I think we're making a nice breakout above that 124 level. And notice on the last few pullbacks, where do the buyers come in? 20-day moving average. I mean, I don't make this stuff up. I just report on it. Last 5 times we've been down testing the 20-day moving average. If you bought with a stop below the 20-day, you would have made money. So until that changes, 20-day moving average, major support.
Okay. Last one is Nokia, NOK.
All right, this one's been around a while. Yeah, on a relative basis, this is just not good. Telecom equipment stocks going up, going sideways here, consolidating. This stock's been going down and consolidating. So look at the relative strength. You got one of the poorest performers in the group. The group is not that bad versus the S&P, but this stock has underperformed the S&P because it's just not a very good stock. Now, we did get volume coming in. Perhaps this is starting to change something. We did get through the 50-day, but we haven't cleared any major price hurdles to the upside. So I would not even consider this stock until it probably broke above. After gapping down on this kind of volume, the reaction high was 535 or so. Till this stock got above 535, it would just be in the waste bucket for me. I wouldn't have any interest in it.
All right. That does complete the 10 and 10. Here are the symbols that Tom just annotated. You will find all of those charts in the MarketWatchers live chart list. Just go to the articles tab, click on the MarketWatchers live blog, and the link to all of those charts is right there at the top. All right, I'll be back with the final market update after this.
Hi, I'm Arthur Hill.
And I'm Julius de Campenaar.
And you're watching SCC TV.
Erin, we are not hearing you. Sorry.
Wow. Okay. Sorry about that. It's just going to be one of those days for me. I can tell. All right. It's time for our final market update. And here we go. Most of the markets are down slightly. Dow is down just a little over 21 points. S&P 500 is down almost 2 points right now. NASDAQ is down it's down right now 1784. This is wrong. I thought I had just updated these. That is totally wrong. There we go. All right. Dow is up right now over 176 points. Currently, S&P 500 is higher, about 0.75%. NYSE is also higher. NASDAQ also moving up. We've got a 0.75% rise on the NASDAQ. Mid caps are I've been traveling up, but we're taking a little bit of a hit right now to the downside. Russell 2000 is participating in this rally, also up about 0.75%. Treasury yields are moving lower, and it looks like we are rising just a little bit off the intraday low, currently at 1.953%. Volatility index, the VIX, continues lower. We're now looking at readings below 13, currently at 1265. Dollar is unchanged. Gold is up just slightly, 22 cents for GLD, 133.63. USO is making a move back up to the upside here, 0.6% gain, currently at $11.77. And TLT making a nice rise along with the market, up a little over 0.7%. And if you look at our sector summary, as you can see, we've got the defensive sectors taking the top 2 spots with real estate and consumer staples. The one that is the laggard, it's still up 0.4%, but energy is the laggard today and has been, of course, amongst the sectors for a while.
Right. I wanted to just give a quick update on the internet stocks. I went over a lot of the industry groups to open the show. But this is one I didn't talk about, and it is starting to show much more bullish characteristics. Beautiful move up off of the early June low, pulled back, essentially held the rising 20-day moving average. And you can see today now we're actually breaking out above those June highs. I think the next level is going to be that mid-May high around 1775. Notice that PPO has moved back into positive territory. And when we stretch this out and look at a longer term weekly chart, I think the fact that we're back above the weekly, that 20-week moving average, and the weekly PPO is positive and starting to turn back higher, I think this really bodes well for the market. I think also we could be looking at a longer term uptrend followed by a pretty steep cup that might be a little deeper than I like to see, pulling back maybe in a handle. Or another way to look at this is this could be equal highs and rising lows, an ascending triangle. Either way, I think we have a very bullish long-term outlook here on the internet group, and it's beginning to look much better on the daily chart. So something to keep in mind. All right, it is time to move into our final couple segments. Let's go into Scooter Report. What do you have for Scooter Report, Erin?
All right. My favorite way to look at the scooters is, of course, right off of our front page. I have a tile set up for scooters. And what I like to do is not just, look at each individual chart on its own. I like to do my candle glance. You saw me do that earlier today in the trade setups. But I'm also going to show you the RRG and how you can look at these all at once. So I like to go to the top 10 or the top up and see which ones are looking the strongest. I'm going to go to top up. I want to see which movers there are. There's quite a few of them. There's Skyworks, and I know we just looked at that one. So let's go ahead and look at it first on an RRG. So I just click here and it brings up all 10 of them. Of course, it lists whether they are in the leading, improving, lagging, or weakening categories. And from that, financials group, Jefferies, looks very interesting to me. It is moving in the proper direction, as does MCK. McKesson looks pretty good. And so those are, at least from the RRG, are the ones that I'm thinking I want to look at. So that was JEF and MCK. So let's go back and look at it on my candle glance. I'm just curious if I'm going to pick them out looking at it through the candle glance. So Jefferies was one. Okay, I do see it on here. It's got a nice little breakout, but boy, that's parabolic if I ever saw it. So I know I wouldn't touch that with a 10-foot pole, but you can definitely see the PMO buy signal come in. We're now seeing a PMO above zero. I mean, it's set up nicely. I just don't, as we talk about, we don't chase. I wouldn't chase this one, but I do see why it was coming up and looking nice on that RRG. McKesson, really nice breakout here on McKesson. Look at the PMO is turning to the upside. If I were just looking at my candle glance, this one certainly would have stuck out to me. The others that are sticking out to me right now, I think Sony looks interesting. Another nice breakout here with possible flag formation. So SNE. And Apple, honestly, I think is looking pretty good right now. It's in a nice rising trend. I'll poke into that chart since it's pretty popular. Notice there's the scooter moving into that hot zone. I guess the only thing that I could really, if you want to worry about something or not like something about this chart, are the declining tops on the OBV. And yet we're getting rising tops on price, and that's considered a negative divergence. So I'm not all that happy with that, but I think everything else is looking pretty good. And there's a really nice upside target here at 215 and past that 230. So seeing that scooter improving like that and getting Apple on that list, I think was looks pretty darn good. As far as the others, if I'm looking at PMOs and, the reaction of price, those were really the ones that I would have looked at. Definitely Apple. And McKesson was very interesting to me, and Sony, SNE. So just from that alone, and that was large caps, and I can do the exact same thing for mid and small, but I'm going to let Tom show me his scooter movers and his scooter report.
All right, I am going to just go right into the scooter. This is another way of quickly finding relative strength. Now, this is the large cap, and for those of you maybe who are unfamiliar with this, let me show you how I got into this. So just from the dashboard, here under Member Tools, just scroll down until you find Scooter Reports down here under Reports and Analysis Tools. You go into Scooter Reports, large cap, it's sorted in scooter order, and you can quickly see what are the leading large cap stocks. Now, another feature of this, which is kind of cool, is you can click on this change, and I can quickly see what scooters have changed the most to the downside, and also which ones have jumped the most to the upside. Of course, Symantec, in talks maybe to be acquired by Broadcom. And so that's one of the reasons why that is changing. But I'm just going to go right now with the top scooter stocks. And what I'm going to do is go down the list of industry groups, knowing which ones I like, which of the industry groups I like, or maybe it's just an individual stock that I really like within a particular industry group. So I'm going to start with software because I think CDNS is one of the top performers in software. I own Shopify. I don't own CDNS, but I do think this is a wonderful stock. So let's take a look at CDNS. Here you can see the stock making another breakout. Look at the volume coming in, continues to be accumulated. When you look at it on a relative chart, look at this move that it made back at the beginning of the year, and just look at the beautiful relative strength on this chart coming across here. Just keeps breaking out. Software breaks out, CDNS breaks out, and CDNS relative to software making another breakout. So not only in a great group, but you're in one of the best stocks. It's being accumulated. I think that is pretty clear by all of this volume. Even after the move down in May, you can see a quick rally back and a breakout to new highs, which I think is really impressive. So CDNS is one that I definitely would keep an eye on. But moving down through semiconductors, AMD, and I'll tell you which ones I own. I do own AMD. So semiconductors, yes, they have been weak. I think AMD is one of the best performers. Look at the volume coming in early June on the breakout. Yes, we did pull back on a relative basis, and now we started to rally. I think we could consolidate for a bit, but AMD, I think, is another strong performer, and you can already see it starting to gain strength again versus the semiconductor group. You go through periods where you underperform and then see that relative strength pick back up again. We had just set a new high in June on heavy volume. The stock, in my opinion, just consolidating, pulling back to where it broke out from. I don't see anything technical that's bad, and now we're starting to see relative strength again. So this is a stock that I'm definitely interested in. Next up, I don't own this one, but within that medical equipment group, Mettler Toledo, another breakout here. This is one that doesn't trade a lot in terms of volume, but it is an $873 stock. So while the number of shares may not be much, if you multiply the number of shares times $873, the dollar volume is pretty significant. So this is a stock that is fairly heavily traded. And when you look at a longer term relative chart, I think you're going to see again, and this is why I think the scooters are so important, because they can quickly point you to the best relative performers. And again, this is another chart that shows exactly what I'm talking about. Just a few more here. MSCI, this is in the specialty finance space. I do own MSCI. This is trying to make a breakout now. It's right up against resistance. If I was short-term trading it, I'd sell it here because it does have major resistance, but I've actually been holding a little bit longer. I'm going to hold it here for now and probably kick myself when it's back down to 230 in a couple weeks. But I think off of an uptrend, we got a nice little cup here. Maybe we pull back a little bit, then make the breakout. But this is another one on a relative chart. It has been a tremendous performer within the specialty finance group. And you can see just looking at these relative strength charts. All right. Next up, what did I have next here on this list? Restaurants. Chipotle. Okay, this is one I own. This one's been actually having a good day today, but it was pulling back. Hit the 20-day moving average, I think looking to break out again. Longer term, it's struggled a little bit on a relative basis of late. I think as long as it holds this June low, the relative low, along with this absolute low, I think that's the trading range. I'm okay with it. What I'd really like to see, obviously, is a move and a break back up above 750. We'll see whether or not that happens. But overall, I think, again, you can see this is a stock that generally does pretty well, has been doing very well. All right, the last two I do not own. IDXX, this is in the medical supplies area. And this is another one breaking out, new highs, great volume trends. We pull it up on a relative chart and look at it from left to right. Medical supplies versus the S&P has pulled back a little bit the last few weeks, but that hasn't stopped IDXX. It continues to outperform the S&P 500, even though it's part of a group that's been underperforming the S&P. So you got a nice breakout, great volume trends. I think IDXX looks great. And then the final one, I've talked recently about hotels improving. Well, Hilton worldwide, HLT has been one of the best performers, breaking out on heavy volume again just recently. Relative chart, you can see here, beautiful move up. Look at the relative strength here. There is hotels breaking out to an 11-month high now versus the S&P 500. So we're breaking out on an absolute basis right here, breaking out on a relative basis, and then Hilton on excellent volume showing leadership in that space. So those are our scooter report stocks for today. And now we are going to go into our final segment, which is agree, disagree. And Erin, this is going to be an interesting one because when you look long term, and I'm talking about over the last 10 years, when we look at the dollar TRAN and compare it with a colon, dollar TRAN colon, dollar SPX, and pull that up on a weekly chart. I don't know, maybe if you can do that or I'll do it.
I'll go ahead and grab it.
All right, let me go ahead and just, well, I'll bring the screen over and then you can watch me do it. So I'm just taking the dollar TRAN versus the dollar SPX, and this is part of the poll today, and we'd love to get your response. Usually when I'm doing a relative chart, I get rid of candlesticks. I don't go without candlesticks very often. Don't really care about volume. I want a 10-year chart, and I'm going to make it weekly. And let's take a look at this. Now, here is the downtrend. Really, for about 2.5 years, we've been downtrending, especially since the beginning of 2018. Transports have been underperforming the S&P 500. And not only have we've been underperforming, but with the exception of that big drop back in 2012, we are really testing some major long-term relative support lines. So the question here is, or maybe the statement, better way to put it, is transports will outperform the S&P 500 over the next year. So the question is being put to you first, Erin. What do you think?
Okay, well, do we ever agree? No, we do sometimes agree. I wanted to start out with just a quick thing of, I'm going to get my screen here. I have a chart, but I wanted to just discuss a little bit Dow Theory. And for some of you know, I mean, there's a lot involved in it, but one of the things they talk about is that if you want to see the market turn back up or do well, you want to see the transports improving. And that gives you a sense that the market is ready to turn to the upside because the meaning being transportation, right? So if you have a lot of goods and people are buying stuff, you know, usually your rail, those sorts of things, having to transfer all those goods start to do better. And that's what you want to see. And so typically that's how it works. However, I mean, I did a chart of the transportation index just to look at it on a really long-term chart. This is a monthly chart, so I'm going way back. But what I noted is that, you know, I'm going to say typically I have 5 data points here. You know, I think if you could go further back, well, which you could, but I don't have that on this chart right now. But typically you're going to see more often than not transports outperforming during a nice rally. It's just seems like the typical thing. And even when they weren't traveling really with the price, we still really were just performing the same as the rally in the S&P 500. In this case, again, it got through here. You did see some underperformance, but really overall, it's rather flat. So typically you do want to see that outperformance. And if we are going to have a nice size rally, I went ahead and said yes, but basing it mainly off of that, you know, the Dow Theory and just looking at these charts that typically when you're in a nice uptrend bull market, you're seeing outperformance by the transports.
Okay, so you went with yes, that we are going to outperformance. Is that correct?
Yes, I agree that transports will outperform.
All right, well, we are on the same page this time then.
Oh my goodness.
I am going to say yes as well, and this is one of the reasons why I'm so bullish the market. This is a chart that I showed. I think it was just when I did the market forecast for the second half yesterday. I can't even keep track of the days. Yesterday, I think it was.
Yesterday.
Yeah, beautiful, you know, move here in transports versus utilities. I always look at the transports versus utilities. because, and I'm talking about Dow Jones transportation average versus the Dow Jones utility average. One's more aggressive. Transportation's more aggressive. When the economy's strong, transports should do very well. When the economy's weak, transports generally do less than the utilities. Utilities normally do better because in a weak environment, rates are coming down. You got a lot of income investors that move into utilities and so forth. So I just think we go through these cycles where transports outperform, then utilities outperform transports. And so I believe we're setting up for another big move up in the transports versus utilities. And there are a lot of different components in the market, and trying to put them all together and putting a puzzle together with just one move on the puzzle is almost impossible. You got to put all the pieces together. One piece that's really been hurting transports is the continual drop in the 10-year Treasury yield. And I think that's forcing a lot of folks more toward utilities than the transports. And during these periods when we see this, the S&P 500's moves tend to be very choppy or even non-existent. But when transports are leading, we get massive moves higher in the S&P 500. So I think this is going to come to an end. I think the overall trend is higher high, higher low, higher high, higher low, higher high, higher low. I think we're going to go back up, put in a higher high. I think transports will lead, and I think the S&P 500 is going to explode to the upside.
Well, I don't know about an explosion to the upside, but I am, overall, I'm bullish. I just think that we have some retracement to go through and then some move back up. But if we do end up in a nice bull market move, clearly the transport should outperform the S&P 500.
Yeah, history is, when transports are moving, the stock market does extremely well because transports are only going to move higher if goods are being shipped. Railroads aren't going to move up unless they're moving more cargo.
Mm-hmm.
And truckers aren't moving up unless they're moving more goods.
Mm-hmm.
So I think this is going to be interesting. The audience disagrees with us.
Yeah, and I wonder if they don't think we're going to have the bull market or.
Well, it's possible. Yeah. I think that there are obviously some other influences too. And I just pointed to the 10-year Treasury yield. What's going on in Treasuries is a little unusual right now. And we do tend to struggle in transports when yields are falling because yields falling tends to indicate a weaker economy. And a weaker economy is not good for transportation stocks. So it makes sense. So I guess part of this question is, do you believe the economy is going to strengthen at all going forward? And I think it is. And I think if your answer is no, then I think you answer that question no. I think that transports will break down below that support line.
Yeah, because they certainly, they definitely underperform when the market is falling. They fall a little bit faster.
Yep, I agree.
Mm-hmm.
All right. Well, let's see here. We have got, another half minute or so.
Chart-wise women.
Yes. Give some details.
Yes. So we're going to have our first show at 1:30 Pacific, 4:30 Eastern time zone. Mary Ellen and I will be looking at some of the statistics of comparing investment strategies between men and women. And then I know we're going to do a segment on farm to table stocks. So you'll want to join us for that.
Yeah, that's very exciting. It's groundbreaking here at StockCharts TV. And it's a spinoff from MarketWatchers Live, which I'm going to continue to tell.
Yes.
All right. Just want to, as we wrap up, remind you the S&P 500 right now, 4.5 points from that psychological 3,000 level. Awesome. Ooh. All right. Thanks to all of you for being with us today. Please remember to complete the survey as you exit. As a quick reminder, MarketWatchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Thursday or Wednesday afternoon, everybody. We're closed tomorrow. Happy 4th, and we'll see you on Friday. Happy trading.